Seeing treasuries pair gains after ISM manufacturing beats estimates. Command Foreign Minister says rescheduling US and Iran meeting planned for May 3rd. It's just for logistical reasons, is what they add. And we have posted out the ISM manufacturing report for April 2025 on the Financial News feed for each read through.
Hear me now? Should be working. So OBS every time it just like defaults to phantom microphones. You guys hear me? Thank you, Mr. Thomas.
CL1 validated.
All right, let me do the disclaimer. I'll be back in 1 minute.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or net losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in most Apple Trader, LLC, and any associated companies, agents, management, owners, and customers farmers without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading requires completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses or material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may amount or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general and to implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results at all, of which can adversely affect actual trading results.
All right, good morning. All right, so a couple numbers just came out. Tons of sell ice, tons of activity here in NASDAQ. There's been nothing in ES, nothing in... I take that back. There was something here in Russell that looks like I missed here. Hold on 1 second. But, you know, swiping all over the place on these numbers, so I didn't do anything in Russell. Lots of activity here in NQ. Lots of sell ice into numbers. Must be lucky guesses. It's almost like they knew what the numbers were going to be. Anyway, we had sell ice, some buy stops. You know, I normally just combine these as a double whammy, and then this came in, and I did take a sexy gex here. We'll go over this trade. I got out of half of it there, and then I got stopped out as this thing just kept whipping around, and then more sell ice came in up here. I didn't take this one, of course, because I was not looking at it, and that was a nice winner. Sexy gexy. We'll go over that trade. But right now I did take a position trade off of this sell ice. I am short both Izzy and Pick. We'll go over that here too. And the number came out, so this thing's just kind of rotating with all this activity. So, you know, normally, first of all, you don't usually see this, you know, all of these events, but normally I would combine at least those. So I'm basically just playing off this most recent one, and that was into the number too. So this is, you know, when you're putting trades on into numbers, you're rolling the dice. But I'm short Izzy and Pick. So when I'm talking about these different acronym, aka strategies, These are all my position trading strategies, right? So the Izzy is an inflection zone, and that was this guy here. So these are my strategies are my important areas. I look for stop iceberg events, right? That's the driver of my trading. So the market gapped up into here, into this inflection zone where a bunch of stuff happened over here. Selling tail, gap down, huge selling tail, and it's kind of struggling again. So usually these are the best Izzy's too, where you get these elongated moves into these zones. So I did take this short into the number, so that is on, and then I took a pick short as well. So you can see here, this is a market profile composite, just another important area that I look at, right? And the sell ice was basically right there. It's this guy. This is where that move happened last time, and it's pretty much overlapping that too. So short Izzy and pick right now. Other than that, yesterday I wasn't here in the afternoon, but I missed the best trade in trading, position trading anyway. Fail balance break outs or downs, right? So yesterday's activity. We're still dominated by headlines, guys. So it's like it's been brutal. You have a great trade on, and then they come out and say something. Trump's talking nonstop, and the market's just, these algo headlines are running the show lately. It's like the market literally feels most days like it's just waiting for a headline, and then you can't react faster than an algo unless you have some automated stuff working where it's reading headlines. You're just up Schitt's Creek with a paddle. Sorry. Pardon my language. But anyway, this is the quintessential fail balance breakdown. You get to the high volume node, you get a bullish event. Again, I wasn't here. I'm sure there were events. You could have definitely taken that trade yesterday. So that was a nice winner for my trade room. You guys should have caught that, or my trading strategy students. So I have, let me put this in right now before I forget. I have a couple new courses out. So I have a trading strategy course that goes over, this is 3 years in the making of all these different strategies, right? 16 different strategies. That's this guy here, I think. Yeah, trading strategy. So this goes over, it's over 7 hours of content, 16 trading strategies, and it's a continuing education too. So as I add strategies, which I will, because there's about another 50 in my head that, and there's always something new, especially with these options levels and the hero flow and all that other stuff. Hold on, we got something in NQ here. I can at least trail my stop now. But anyway, there's gonna be many more strategies that you get automatically as a member of that course. All right, so again, I'm short this, that Izzy and pick. There's new sell ice coming in here. So when I take these trades. So when you look at this chart, if you're new to these webinars or you're new watching me, it looks like this is just ridiculousness, right? It looks like you'll get a seizure from looking at all this stuff. But once you understand what it is, it's very basic. I keep my trading very, very simple as far as what I'm looking at. If you don't know my history, I used to be a very large scalper, and all I did was stare at the depth of market and play the games and the patterns in the dome. That type of trading is done these days because the algos are running the show. So unless you have a automated strategy that can, trade as fast as a computer, you have almost no chance trading off this. That's what I continue to try to tell traders that want to trade off the dome, that it's, again, I'm not the end all be all, but I was one of the best in the world at it. And if I can't do it, it's probably pretty hard to do. So we do have scalping type strategies that we take on reversion trades. We'll go over those in this webinar. But other than that, good luck if you're trying to trade off of the dome. So anyway, what I was getting at is what you're looking at here on the chart looks like there's just stuff everywhere, right? There is stuff everywhere, but once you understand what it is, the main component is this SI indicator, stop iceberg indicator, right? This is showing me stop runs, which is usually retail trader pukes, which usually reject right away. And then we're showing me the large player activity. So somebody has been in here selling this entire time, right? So it's like sell ice, you can see. So whatever these zones here are drawing this activity on the subchart. So, for the last 8 years, I've had to draw these things manually. Every time something would populate in the subchart, I would draw it manually. I'd enter into a spreadsheet, and it would tell me where I get in, where I get out. So now we have the zone drawing tool, thanks to a programmer that's a trader in my trade room that figured out how to draw these on the chart. And then we have everything laid out on the chart that was in the spreadsheet, right? So this was sell ice. This was this activity here. So these lines are, the blue line is the ATR, the current 5-minute ATR. It's a very good gauge of volatility, especially for my time frame that I'm trading. I'm a day trader, right? You can have a hourly ATR, a daily ATR. The best one for day trading that I've seen over my career is the 5-minute ATR. Very important to know the current volatility. So I say it all the time, the traders that have these static, I like to risk 10 points to make 20 in NASDAQ. That's fine when the ATR is 10 to 20. When you get a 41 ATR and you're risking 10 points on a trade, just your static number that you're putting into the market that is just going by what you think, you're going to get whipsawed many times just because this thing's rotating 41 points every 5 minutes. So the zone drawing tool takes that into account. So this is how I judge whether these events are bullish or bearish. So when it's able to push an ATR out of the zone, it tells me this is a bearish event. Most likely it is a bearish event, but most likely going to continue down versus coming back. Or not coming back, because they come back to the zones all the time. We have a trade for that. We'll go over that. That's the reversion trade I was talking about. But the odds are that it will continue lower. So that's the blue line. And then the yellow line is my entry if I'm going to take a short, which I did, and then my stop for that. So I'm risking this entire amount to avoid the best I can this algo activity that you see here. You can see this, they're full force right now with all this, they're pulling in orders in the order book. This is why I say you can't trade off of the dome. So anyway, again, we do have certain strategies that I enter right in the middle of the zone. There's only a couple of them. The rest of them I'm waiting for moves out, and then I put my stop on the other side of the zone. The great thing about this zone drawing tool, it basically covers every issue that traders have why they don't make it, right? So it gives you the exact entry, exact stop, where you get out if you're wrong. It gives you, most importantly, it gives you the ATR, the volatility, but this all adjusts, as far as your entry exit. And then most importantly, it gives you your position sizing. So for these trades, I'm risking $500 on a trade. This tells me, if I'm taking a short, let's now move to this zone. If I'm going to take a short or a long, and by the way, I'm going to stop out of this these trades if this comes back. So again, I was short off here, off of this event, and you always default to the most recent event. So if this moves out of here in ATR plus, that's the yellow line, I'm stopping out of that trade. My stop was originally up here, and I moved it based on this new event. So let me get those in before I forget. 53 quarter. So again, you can see the prices over here too, and if you hover over these lines. So now it's labeled long aggressive. It's the same as the short stop out, or if I go long here, that could be going long here too on another strategy. We'll look here in a second, but 50 and a half is where I will cover these. It's almost there. So very choppy as usual right now. What was the other one? All right, those are working as a stop out. So I'll stop out of my shorts based on a new event, and then if this turns bullish, then there's potential trades we can take, position strategies we can take based on this. So this is an Izzy coming back, right? So both of these were from prior things, but you can see I got the sell ice there. I went short. Now we got sell ice in here. So just because it's sell ice doesn't mean the market's going down. As you can see, there's been sell ice the entire morning, and the market's not going down. So I have 6 distinct setups for these SI events, Stop Iceberg events. This would be called broken ice. So this is a broken ice event. So I just stopped out, of course, to the exact tick as usual. So you will be amazed if you use this zone drawing tool. These prices, it gets really annoying, like how the market reacts at these levels. So you see here, I had my stop right there. I just stopped out to the exact price point on that short. So I haven't gone long yet, but if this comes back, I still don't even know how I got filled there. So That shouldn't even have filled me. Actually, so this is moving with the ATR, so I had it at 50 half, so it did stop me out there. So big deal. It's like it was a small loser. I was able to trail my stop based on the new event. If this comes back, I'm going to take an Izzy long at 952. The issue with these trades here, one, the sell ice has been coming in. They're not always right, but somebody keeps selling. Two, I don't like, this is another thing I look at, I don't like taking trades right into these Ludwig levels because they're so powerful, right? So I'm going to be taking a long into that. But again, when you look at my trading strategies, I follow my rules. You don't see in this trade, the Izzy trade, don't take into Ludwig levels, right? So, it feels like it's not a good trade. I got to get in this too, by the way. Hold on here. Hold on, Nasdaq. All right. It feels bad because I'm in the lug, but these are my rules, right? This is the only way you're going to make it in this business is by having an edge first and foremost, having rules around your edge, and then taking the trade according to the edge, whether you feel like something's going to happen or not. This day and age, to feel the market, to have that intuition is almost non-existent. I used to have some of the best feel out there as far as order flow. It's almost impossible with these algos. So I have distinct rules. I put on the trade. I know my risk based on my sizing, and then I put on the trade and I put my stop in. So I went long here. My stop's here down at 19,847. This is how far I go. Again, to avoid this nonsense the best I can. So for me to be wrong on this trade, it's got to come back a full ATR. It's got to get through the volume event. And in this case, it's got to get through some GEX levels. We'll get into that. It's got to get through that, and then it's got to move another ATR plus for me to be wrong on the trade. That's what I demand, and that's the best way to stay out of the nonsense. So again, this all sizes according to this entry and this exit. We do have trades, which we might take in right smack dab in the middle of the zone, which is a better risk-reward trade. But again, all my strategies, I would love to just jump in the middle of the zone, which I did when this first came out, and I learned the hard way that's not the best way to get in these events, to trade these events. It's to wait for the market to show its hand by pushing ATR plus out, and then putting the stop on the other side. So I will put this in here. Stop for this long is 19,847. Just about 100 points down. 19,847. There's really nothing going on besides NASDAQ. I mean, it's the only game in town this morning. All right, so I got that working. What else could I take here? Looks like I could have taken a... That's close. So then we have reversion trades, right? So that's this here. Let me post this too. I forgot to post this. So this is this course that I just did as well. This is the ATR reversion course that just happens not... I could show you 10 of them today already, probably more than 10. We'll go over some of these. But when you get the event, the propensity for these markets to come back to the event is just ridiculous. And I mean ridiculous. It happens all day, every day in all these markets. So let me post this in here. I'm going to come up with a better format for this, by the way, soon. This is kind of... But this is everything I use in my trading. We'll go over this, but let me post that. Scott is using his camera. Okay, so yeah, I'm on the camera's not working in here for some reason. All right, so now we have reversion trades, right? So just to show you a couple that have worked. Again, there's way more than a couple. So one just worked here in crude, right? So propensity for these markets to tag ATRs, the 1, the 2, or the 3, and come back to the zone is insanity. It happens. It's just ridiculous, right? So you can play these trades where you just jump in the minute it touches the ATR and it comes back, the 1, 2, or 3, and I always get asked, well, which ones do you take? I don't know. Some days the 1s work nonstop. Some days the 2s work nonstop. Some days the 2s get blown out and the 3s are working. So whatever one you're going to commit to, this is for any edge that you're using in trading, you've got to take every one that you see, right? That's how you let the edge play out, just like a casino dealing cards. I use the same analogies every single time I talk about this stuff because it's the best one, right? When casinos are dealing cards, they know they have the edge over the long run, over a large series of cards being dealt or dice being thrown, rolled. They just keep dealing cards, right? This is the same with edge in trading. An edge is nothing more than a probability, again, just a quick trading in the zone document. I always do this because anyone in my trade room might talk about they should be reading this every single day before they trade because it's the most important stuff. But an edge is nothing more excuse me, than an indication of a higher probability of one thing happening over. That is happening over another. That is it, right? And there's a random distribution between wins and losses. So meaning you don't know which one's going to work, you put them all on, right? So I'll dive into that more as the webinar goes on. But the point is, you can take these aggressively, meaning the minute you get every time you see a 1, you take it, or you might say, I'm not taking the 1s, I'm just going to take the 2s and 3s. Fine, that's fine. But if you're like in this instance, if you're like, oh, I'm just going to take the 2s and the 3s, well, the 1 already retested. These are off the table, right? I for my rules, if you're following my strategies and my rules, I look for 1 retest, and then that trade opportunity is done, right? So even if this does come back to the 2, I would not take the 2 or the 3 now because the 1 already works. So this is my point. If you say, I like the 2 and the 3, and I'll quickly go over these odds here of each one of these. Hold on here. Traders like to know this. Each one of these. All right, so there you go. First of all, let's just go show real time. Oh, that was the prior one. So, well, first of all, I can put on an A+ reversion here. So this is what I'm going to do on this. This touches this here. Put this guy in here. So that entry is, see, I probably should jump in this because it's fighting this Gex level right here, but the entry is supposed to be at 19,979.50. I'm just going to hop in right here. I'm going to skirt the rules a smidge here. Okay. So it's going to fill it anyway. So what is this? This is the 2 ATR, right? Why didn't I take the 1? Because, well, first of all, I'm not taking these aggressively. If I did take the 2 or the 1, it's about to get stopped out. But again, this is just, you just keep taking them. This is an A+ reversion where I'm looking for the entry, as long as the entry is in front of or into a prior event, and as long as the stop is outside the prior event, I'll take the trade, right? So these are just more secure, if there is such a thing, and I'll explain why, reversions, right? So we already know the markets come back to these events with ridiculous regularity. Now you have traders that are loaded up in these areas so whoever was short in this area or long in this area felt this pain, right? Whoever held on and didn't puke them out. And it's just human nature, right? Everything in my trading is how I used to react as a large trader when I had, all these strategies basically is how I used to react when I had large size on, and what would I do, if I was in trouble, so on and so forth. So when you get these pockets, these areas of, large trade, which that's what the Stop Iceberg showing you. So, someone in here was buying aggressively and it did that. They're like, oh my gosh, please let me out if I want to break even. I'll never do this again. This would be me, right? Like I would load up. I go long like 1,000 contracts back in the day when I was trading ES, and it would move against me, and I'd be like, I'd have my finger on the trigger ready to puke, and it would start coming back. I'd be like, just come back, and I promise I'll get out. I'll scratch this trade. I'll never do this again, right? Like every time. So that's what causes the wave back down. So now you have that pattern, right? Plus the pattern of the algo snapping it back. And then what you have here too is a Gex level. So we have a reversion trade. Again, this is part of the course too. It's called a back in black. When these markets tag these Gex levels, that helps it comes back too, because you have the dealer activity that's hedging. So again, this could blow right through here. That's fine. But the edge is, the probability is it's going to come back to the zone. And I have multiple things that could hold this here to get it back to the zone. So my entry was right there. My stop's up here. So that's what I'm getting at when you're looking at this chart, right? So again, here's the event. Here's the ATR. Here's the entry if I'm taking a long. And then these these dotted lines are the reversion. There's the 1 ATR, the 2 ATR, the 3 ATR. And then the dashed dotted lines, the red lines, those are the stop outs for that trade. So if I take the 1 ATR, this is the stop for the 1 ATR. If I take the 2 ATR, this is the stop for the 2 ATR. So I am in the 2 ATR A+. It's called an A+ reversion. All right, now we're getting headlines as usual. Hold on. Oh, we got so we got Iran talking, and then we have the daily Mexico's I call her Shine Box. shine bomb who never shuts up. So for some reason, she moves the markets more than Trump does most days. It's ridiculous. But anyway, she's talking too right now. So guys, this is the new normal for these markets. Like you're in a trade and then they start chirping and then you get blown out. So normally, if I know someone's scheduled to talk, I won't take the reversion trades or sexy gexies because it's just suicide, right? You're just hoping that whatever they say is in the direction of your trade. You know, with her talking, I don't know how long she's going to be talking, so you know the trades are on. This trade's on, but you know if I get blown out, I get blown out. So anyway, the stop for this reversion trade's up here, A plus reversion, 220,028.50 is the stop for that. Let me put that in. Right, so if that comes back, this is my exit. I'm out at 908. So in the meantime, bigger picture look though. You know, again, I'm taking reversion trades and I'm taking position trading strategy. Remember, I'm long. All right, this is actually a sexy gexy here. There, I'm gonna take this. We'll go over this trade here in a second. So I'm long one strategy. I'm short another one. Right, so I'm long the Izzy. We went over that. And I took the reversion trade. Now I just took a sexy gexy short. What's a sexy gexy? When you get a move into these gex levels, when you know there's already going to be the dealer reaction, right? Because dealers have to hedge at these levels as they come into the levels, right? And then you throw in an opposing volume event, which this is a stop run, right? So buy stops are usually fades, like these were at the time, right? Because it's just retail traders puking out. They do hold sometimes. We have a name for that. It's called stop and hold, where you do get the stop run and the big money's behind this. In this case, this is for the sexy gexy standpoint strategy. This is a stop run into the call resistance. I take the trade. This is one of what I was talking about. This is one of the only trades I take smack dab when the event fires off. So my entry is there. I still use my traditional stop over there. So I'm going to put that in right now. Again, guys, this is for educational purposes only. It's not for you to be mirroring my trade. What was I saying? Mirroring my trade. I can't think of the word. Mirroring. That's what I meant to say. It's for you to learn how to do this for yourself, right? So just keep that in mind. If you don't be taking trades off of what I'm doing, if you don't know what you're doing, if you know what you're doing and you're in my trade room or you take the courses and stuff, that's fine. You should be taking these trades on your own, but don't take them just because I'm taking them. Is what I'm getting at. So anyway, I took that short. I am long the Izzy. So what can I do now with that position trade Izzy that I went long down here? Here's a new event. Well, first of all, I could get out of a couple here if this struggles here, because these are one of my areas I get out as the market makes money available to me straight out of trading in the zone, right? So I'm going to watch this here. If this starts to falter, I'm going to get out of a couple of these. Hold on here. I'll give this like a second. You know, I want tick strike on too, so you got to kind of judge here. Like, hey, is it going to keep going or is it going to falter? I hope it falters because I have short sexy gexy on too. So it's again, I have different strategies on it. I'm short two strategies right now, and I'm long another strategy, right? And this is how you can judge. So again, this is in the document too. This is tick strike. This kind of tells me, like, if I hear this stuff going crazy, well, I don't have to get out of my short. I'm going to get out of somewhere here though. All right, so I got out of a couple of my Izzy longs because it came into this level. It's kind of struggling. Now with the short I just put on, that's this guy here. The way I trade these sexy gexies, again, this is an auto entry trade in the position trading strategies down here. Sexy gexy. Take any fade trade into a spot gamma or Menther Q gamma level where you know these dealers are going to be hedging. Trade is taken immediately when an opposing SI event fires off. Market moving higher with a buy stop, that's what we just got, or it runs into sell icebergs, or market moving lower with a sell stop run into or buy icebergs, or into buy icebergs. Yeah, that's right. Be wary of this trade if relative volume is elevated 200% or more, because in footprint volume 2 we can look at that, but the point is you don't want to be taking these sexy gexies looking for dealer reaction, and we have the Ludwig level here too, by the way. You don't want to be looking for these reactions if there's heavy relative volume coming in, because that's the big money playing, and it doesn't matter if the dealers, the whole idea behind this trade is the dealers are going to hedge a little bit, and that helps the market move lower in this case, right? So actually, the way I trade these two, let me get this in here. What's wrong with this? All right, so the way I trade these Gexies is looking for the dealer reaction. I get out on the first move out just in front of the ATR. Again, this is a different strategy than the position strategy. So I'm just getting out, looking for a dealer reaction. And then I'll let the other half ride like a position trade, right? Because it is a SI event, which is the best edge you can trade with, in my opinion. So that's on. I did get out of a couple of my longs there, and I'm still short the reversion trade. I didn't get stopped out, and I put on a sexy Gexy trade. So guys, this is the deal, right? I'm trading live. I'm trading multiple markets. I'm trading multiple strategies. If you're new in here, your head's probably spinning. I hear all the time, it's like drinking from a fire hose. Yes, because I'm trading live. I'm trading multiple markets. I'm trading multiple strategies. So for people that are always emailing me, what do I need to come in your trade room? Well, you can learn this stuff like you see while I'm on these webinars, but it's very hard to learn while I'm trading live. So that's why I made the courses. Did I put this in, by the way? Yeah, I put it in. So that's why I made these courses, so you can understand this stuff. So when you do get on my webinars, then you know what I'm doing and you can follow along and trade, right? So that's that. Any questions here? Is this BTC? No, that's not BTC. I should have BTC up. I don't know what happened to it. No, but the same thing happens. You get they're not anywhere near as frequent, but you get these volume events in Bitcoin and Ethereum futures as well, and you can actually trade. You can trade the futures, or if you get the events in the futures, you can trade the cash market, right, which is very accessible. So, but no, this is Nasdaq. And then the other thing too is you can see here this zone drawing tool, it alerts you. So this was telling me that this event validated long. Remember we talked about the validation point. So this alerts you as well, and then it tells you when it retests the zone, so on and so forth. So actually, I'm supposed to be out of this reversion trade. I forgot about this. Hold on. Wait, that's the wrong one. Sorry. Hold on a second. I'm confused here. All right. I have the reversion trade on another one, so I should be out of that trade right now, and I'll tell you why. Hold on. I lost track of it when I was explaining it. All right. So I was playing this A+ reversion, right? Back to this zone. Well, when you get a new event, it's done. I'm not hoping it comes back to this event if I get a new event. So I'm out of the reversion trade. I was thinking I had the reversion on this one. So this is actually, this reversion trade, this A+ reversion is working at a trading firm, automated. So all right, we got more chirps. Anyway, I was waiting for that to happen. I got a new event, the reversion trade I'm out of. So all I have on now is I have partial inflection zone long, and then I took a sexy Gexy short here. So my stop for the sexy Gexy short, turn this guy down, is up here. Let me put that in. So I accidentally got out of this sexy Gexy because I was thinking this was the A+ reversion. I have that on a different account. So the sexy Gexy is still live, right? If it rips up here and stops me out, rips up here and stops me out, then guys, again, this is trading. You take every event that you see if you have the edge. So that's the trade. It's on. I'm still long. If it does rip up, I still have some Izzy longs on. Now to the position trading strategies. This is an event. That's step one. You get the event, and then you see what important area are we at. So this is still in an Izzy zone, coming back, right? So remember, I went long Izzy there. Now we're in here with a volume event. So I'm not just jumping in the Izzy trade aggressively like I just did with the sexy Gexy. So this is why I wait for this to move out. So if this can move lower, I'll get out of my Izzy long and into an Izzy short. But this is why I wait, because the odds of it's not great odds when you're just jumping in the middle of the zone. That's why I forced it to get the ATR out for the position trades. The sexy Gexy is an auto entry trade, but they're still, they're not the best odds. I like to see, for position trading strategies, I want to see it show its hand, meaning push an ATR out of here. So anyway, sexy Gexy's on, and I'm long Izzy. If this comes back off of this, I will get out of Izzy, because this is how I trade, right? I always default to the most recent event. I'll get out of my Izzy long, and then I'll get into an Izzy short. What else could I put on? You can see they're buying these stocks, so this is, Gexy is not looking good. Oh, I could put on a slug. What's a slug? Slug is a stop run into a major lug. So all I'm doing here, this is what the course is. I'm covering these different strategies. So this one would be this strategy. Take any trade as a fade trade with a stop run into a major lug. So again, you don't see me putting this slug on right now. I want to see it fail, and I would get in the slug and the Izzy position trades down here. Other than that, I don't enter those trades. This is what I demand. Again, this is from me watching tens of thousands of these events. This is the best way to enter most strategies. I did take the sexy Gexy right in the zone, but for my position trading strategies, I need to see this move out of here. All right, so I will put the slug on 948 quarter, and I will get out of the Izzy at 948 quarter, and I'll take Izzy short. Let me put those in before I forget. If you got questions, throw them in the YouTube. And I could put on, based on my sizing, based on risking $500 on a trade, and I have no opinion up here as far as trading bigger, I could put on 0.2 of a big contract or 2 micros, risking $500. So there's no guesswork here. For this trade, I wait for it to fill here, and I could put on 0.2 for the Izzy and the slug. And I already forgot my entry price. 947.75. So you also want to be adjusting your entry until you get filled, right? Because this thing's going to move around with the ATR. So I'm moving it until I get filled. Once I get filled, then I put my stop in, and then wherever that stop, I don't change that once I get filled as far as my stop price. All right, so 947.75 is the entry for the slug and the Izzy short, and I'll get out of the Izzy long. 947.75. And I got Izzy on here. That's working. All right. So those are working. What else could we do here? Well, this hasn't shown me its hand yet as far as my rules, whether this is a bullish or bearish event. How do I dictate that? If it could push the ATR out. So if this pushes out of here in ATR, this is now a bullish event. And there's other strategies I can take to the long side, namely bark and lick, where you get the ATR, the retest, the confirm, and you take the trade. So I don't usually take those trades into the red lug because, again, we call Ludwig levels lugs, and that's in here too, by the way. If you go down to the bottom here, Ludwig levels right here. Go to our site and get a 3-day trial. But I don't usually take those bark and lick into the lug because they're so powerful, but we should be getting new lugs here if this blows out. You see it's like just sitting at this Ludwig level. So you can see they're buying this thing like crazy, all these Mag 7 stocks, and the other thing we look at here, here's another stop run, by the way. All right, so I'm going to stop out of this Gexy, very likely. But we got a new event here, and we have other trading strategies setting up here. All right, I'm still in this as of right now. There's no Gexy here for me to put on, or I would do it again, right? This is the whole point of trading. If there is, yeah, this sucks that this Gexy's not working, but say there's a Gex level right here, and I'd put it on again. This is what you do, guys. And then, there's going to be days where things just are not working, and it's happening a lot lately with all the nonsense headlines. You just shut it down. You say, okay, I hit my loss limit for the day, back tomorrow. It's just like when you play in a sporting event, right? Like if you go and play like a tennis match, right, and you lose, you don't just stay out there for the next 24 hours until you win, right? You're like, okay, you got me today, I'll beat you tomorrow. It's the same with trading. If you have to view it like a competition, right? So it's like if you get beat in a certain day, you have your loss limit, so you don't blow out your account, and then you just shut it down and say, I'll see you tomorrow, back at it. If you have the edge, over a series of trades, you'll do fine. You can't, but don't blow out your account on one day where things just are not working, and it happens all the time, especially lately. All right, so anyway, there's no sexy Gexy here. I haven't been stopped out of this one yet, but it's close. What else do we have here? Well, one, I can still take the bark and lick off of that guy, as long as this most recent one, remember always defaulting the most recent event, as long as that doesn't prove as a bearish event, I could still put that trade on. I can do the same with this guy if that happens, ATR retest confirm. Then for the reversion trades, this is an A+ reversion event. Here's your 1 ATR reversion, smack dab in the middle of this event, and it's at a gamma level, and the stops outside of it. So if this comes down here, I would put an ATR reversion long on, A+. So that price is 998.75, and then so this is the position sizing for both the strategy or both the trades I put on. For the position trades, when I'm waiting for the move out of here, like to go long, for instance, I can only put on 0.2. The risking $500 for the reversion trade. For risking $500, I could put on 0.5. That's this entry here with this stop down here. So if that happens, I will put that trade on. That entry is at 996.75. And I could put on 0.5. $996.75. So whoever's been buying in here, so again, bigger picture, this is what I mean about paper's not always right. Paper, when I say paper, and we have a glossary of terms that I made for the trading course too, so it's like I use these terms, and guy JJ from my room said, hey, why don't you get a glossary? So I'm that's in the works. I mean, I've done it, but I'm adding stuff all the time. But when I say paper, I mean bigger players. So somebody in here this morning was selling this like crazy. How's that working out for him? Not real good. It's a great example of the big money's not always right. But that's great. We have trades, it's called broken ice, so on and so forth, right? I took the broken ice Izzy long, and I'm still long, by the way, that strategy. The point is, this is a lot of activity. And this, usually the big money, the paper are using stop runs. But regardless, whoever was selling in here with paper and say they saw this activity, like, oh, I want to get short too. Well, they're starting to puke them out, right? So that's the whole point. But the bigger picture stuff, like for the bigger move today, this activity, how much pain can they take, even though they're the big money? Say this is you at a trading firm. This was you selling all of this. And if you got 4,000 NQ contracts on, how are you feeling right now, right? So this activity, we're just looking for in these zones, activity of concentrated traders, and we're taking advantage of when it moves out of there, right? So just bigger picture though, all this activity may lead to a whopper move higher today. And if for some reason, if it comes back, it might lead to a whopper move lower. So this is like the area to keep an eye on. It's breaking out of there right now, but we'll see. I did go long this broken ice event down here. I was just looking to see if this was a Gexy. So this was not a sexy Gexy at the time, and that's why I call them sexy Gexys, right? So if this came down to these Gex levels and I got a buy ice event, I would have taken that, or sell stops. I did take the Izzy trade. That was that entry up there, but I was just thinking I missed a sexy Gexy. I did not. Speaking of which, I'm still in this guy. Haven't been stopped out yet, and now this is moving down for a potential A+ reversion and a back in black. What's a back in black? It's a variation of a reversion where this is close. I want to see usually a bounce off an area, important area, and as it comes back, then you take the corresponding ATRs back into the zone. So actually this example I have here for the course was an awesome back in black in ES. Where's that here? This guy. So this screenshot is a back in black. So this wasn't too long ago either, right? You had buy ice here. By the way, this was a sexy Gexy as well. I tagged this gamma level here and started coming back. I took the 2 and the 1 right back to the zone. So these are so we have 4 different ATR reversion strategies, and that's what that course goes over. But that's the one. We have the A+, and then we have the back in black, and we have the footprint as well. You can look at the footprint too. And then we have the aggressive entries. Just want to see what this looks like anyway. All right, so usually a large amount on the footprint, right? So this is a 10-tick reversal or 10-point reversal, 40-tick. So it doesn't draw. It won't draw a new bar until it reverses at least 40 ticks or 10 points, aka 10 points, right? So usually in these reversal bars, the normal large volume is about 10,000. Well, today the ATR is 40 plus, so you're not going to see 10,000 as concentrated volume. So this is why I don't talk about this a ton, because it's so variable based on the volatility. But the A plus reversion, the footprint reversion would be, say you had an event, right, or a bar, I should say, and it's 10,000 or more, right? And then you get an event, SI event. Well, the trades, the reversions, the 1, the 2, the 3, back into the footprint are incredible trades, because all the sellers here that are loaded up, and you know there's a ton of traders in there. We just talked about how the propensity of these markets to come back to those areas and then come back to the zone. So that's just one of the variations. It's a footprint variation of the reversion. All right, any questions? No questions. All right, so still waiting to get stopped out here of this, which is about to happen, of this Gexy. Stopped out. And now I'm still long, right? So are there other areas here I can get out of some of these Izzy longs that I put on at the beginning of the webinar? You know, we're at the lug. So I should have been out at the lug. I usually get out of my trades at the Ludwig levels. That's my main target because they're so powerful. So I'll give this a second. If this starts coming back, I will be out of this Izzy trade. This was a good trade, right? So this was this long down here. I just lost. I kept talking about the lug, and I was not realizing I should be out of my trade. So I got long here. Basically 19,950. This is a 100-point trade, right? So the Izzy trade worked great. We're at the lug. If this starts to fail, I'm going to get out of that. I'm going to get out of this long. And then I still have my reversion trade working, A plus reversion to that. And then we have other strategies that I can put on too. So remember, if this does retest this zone, I can still take strategies off of this guy, Bark and Lick namely. Say this keeps ripping higher, well then we have potential reversion strategies back off here. So you see, guys, it's like what I tell my room, you know, I have all of these in my head. These are my strategies that I've developed over, you know, my 25 years of trading, right? It's not to come in my room or get the course and try to implement every single one of these. There's no way until you understand what you're doing. Even then, you might not be able to do it. So the idea is come in the room or get the course or whatever you do and pick 3 of these. Okay, I'm going to concentrate on the slug, the bark, and I like that Izzy trade that's got put on. Those are the 3 position trading strategies that I'm going to look at. Then I'm going to pick one of these auto fade, meaning these are the ones that would happen right in the zones. I like that sexy Gexy. I'm going to look for sexy Gexys for the auto fades. And then the reversion trade strategies, I'm going to look for the A plusers and then the back in black, right? So take 1 or 2 of each, and then that's what you focus on. So I'm going over all of these basically as they come up. That's not for you to get in there and try to trade all of them. If you're looking for the back in black, then you're like, I don't like the A plus. I don't know why you wouldn't like the A plus, because that's why it's called A plus. But say you don't want that trade. I'm just looking for back in black. So then right now you should say, all right, my back in black trade is if it rips up to this Gex 10, starts coming back, I'll take that corresponding ATR. Or if it rips down to this Gex level and bounces, I'll take that one. And then that's what you're looking for. You're not jumping from strategy to strategy to strategy like I am. I'm just trying to cover all this stuff because these are my strategies and I want to go over because I don't know which ones traders are using anyway, right? So it's like there could be guys just trading Izzies. Well, I put on an Izzy. It could be guys just taking Gexies. Well, I put on a Gexy. So I cover everything, but that's not what those are meant to be until you understand what you're doing. And for you to implement all those strategies, you would need years of exposure of taking them. Speaking of which, I'm missing this. Back in black. Oh, I already did it. So again, this is a great example, right? I look for the first reversion. I didn't take this, but this is bouncing off the Gex level. Well, am I taking that? No, it already retested the zone. If it had not already retested the zone, I absolutely would take this trade right now, right? Here's the 1 ATR. This is back in black. Tag a Gex level or an important area. It doesn't have to be a Gex level, but Gex levels are the main ones. Tags it, holds it, starts coming back, take the corresponding ATR. I'm not doing that now because it already retested. I look for one retest. Does it mean it's not coming back to the zone? No. But the odds of it coming back again are a lot less than the first time. So that's why I only take them one time. All right. Do you think the seller was trapped? Well, Yeah, what do you think? I mean, yeah, whoever sold here is bigger money, right? That's why they have to use icebergs. 'Cause when they're using icebergs because they don't want to show their orders in the order book because the algos will front run them. So icebergs are just big orders. They just have to display a portion. So as this market, at the time came up here, if you're looking in the order book, say they had 1,000 to sell. I'm just giving an example. I mean, overall this was over 1,000, but say they had 1,000 they had to sell. Well, in the order book, it just looks like a 100 lot. They just have to display, I believe it's about 10%, right? So 100 lots, not a lot. And then people jump up and they buy into the 100 lot, and then there's another 900 behind it, hidden, that populates once it's traded into. That's why it's called an iceberg. Why do they do that? Because of the big money came in here and just put 1,000 lot. Look at the order book. It's 5 and 6 lots, a 30 lot. If they put 1,000 in here, what do you think the algos are going to do? See these algos in here? See this Christmas tree activity? They're going to run it away from this order, trying to make this order chase. Right? The orders don't like to chase. They like the best price they can get, so they have to hide their activity. But we get to see what they're doing. So yeah, are they trapped? I would say they're not feeling real good. You're never going to know what they're doing either, right? I always get this question, especially when I first started, when I introduced this to the public. Well, yeah, they're selling. How do you don't know if they're hedging, or they're hedging? They were long and they're getting out. You don't know if they're hedging their options activity. You don't. I don't care. All I know is you're never going to know, first of all. So stop. I can't tell you how many traders I hear this from. Like, what do you think this is? Or like, how do you? It doesn't matter. You just have to identify the area, and you're going to get big moves out of the areas most of the time. That's what we're trading off of, right? So stop wasting your time trying to guess what they're doing. I just know there's sell ice here, a ton of it. And there's somebody on the other side of the trade. So somebody's buying, somebody's selling. When it moves out of here, we take advantage of it. That's all we're doing, right? And these are concentrated areas. That's what these zones are. So yeah, are these sellers trapped? Yeah, if they were initiating shorts, they could have been getting on longs. I don't care. I just know the patterns of when you get this activity for the markets to make huge moves out of them. And that's what we're taking advantage of. All right, so this is another awesome MO of mine. Happens. Hold on. That's Japan something. This is my MO lately. I mean, not lately, for 25 years. I mean, stop to the tick. It happens to me 20 times a day. Most traders don't get stopped 20 times to the tick, filled or exits in a year. It happens to me 20 times a day, and I'm not exaggerating. So if that's sexy filled to the tick. I still have the reversion, A+ reversion working here though, right? So again, that's trading automated. I'll put it on here anyway just to show you guys, since I'm not in the GEXI anymore. So I'll put this. I shouldn't be doing this because it'll be loaded up 2 times or twice as big with the trading firm, but that's all right. What am I doing here? I need one more. So I'm going to enter. Again, this isn't A+. You can take the back in black too, but the back in black is waiting for it to bounce off of one of these areas and then take them as they come back. This one's right on it, right? But it's okay. It's an A+, so I'm fine with it. What am I doing here? Hold on. Struggling with the Bookmap. All right. So those are working. All right, and I'm. Oh, not. Did I get out of the? Hold on. I'm still long, aren't I? Can't remember if I got out of this. Yeah, I'm still long Izzy. Remember I said if it struggled here I was going to get out? Well, it's certainly not struggling, so I'm still in it. All right, so now we wait for the next strategies. If this keeps ripping higher, I'm still long that initial Izzy from earlier. And then we can take reversions. We can take barks and licks. So we'll see what happens. Again, the only trade I jump in the middle of the zone are sexy Gexis and TikToks and a flow B. Again, those aren't very likely going to happen here. But the rest of my trades, I'm waiting for this zone to show its hand. And there's nothing else going on here. Here's your retest of this zone off the GEX level. Again, it already retested once. I didn't take this, but just to see, like, this is how these markets trade, and they come back to these zones with ridiculous regularity. It's just silliness. There's another one here. I forgot even what I did here. What did I do here? Oh, this was I took this back in black. That's what this stuff is right here, right? So this was pre-market. Came up. Tagged the blind spot 9 GEX level. I took the corresponding ATR out of the zone. That was a back in black reversion. 1 ATR.
So speaking of from a funds report, they're saying that the estimated here proposes an
All right, I don't know. Guys, it doesn't even matter if you hear the story, but it's already cooked into the market, right? By the time you hear it, the market's already reacted because these algos, these headline reading algos. So, I mean, I like to have the news up because I like to know why I got my ass handed to me, but most times there's not much you're going to do about it, right? So unless you can automate it and read keywords, stop trying to trade the news. You've got no chance. Benjamin Atlas. Alatus. Is there a way of figuring out when orders are most likely spoofed to sit there to trap people? I mean, most of this stuff is spoofing. Like you're looking at spoofing, right? Spoofing is supposed to be illegal. That's spoofing. You see how they're putting in orders, pulling them? You can see it on the heat map. But no, I mean, this is why I wait for my entries out of here and I put my stop down here because I try to avoid this nonsense as best as I can. And this is 90% of the trade. Between this stuff and then dealers hedging with futures, the options dealers, that's 90% of the trade. The other 10% of the time, that's the big money that comes in here and plays. But you can see here, these algos can see when nothing's going on, just like we can see when there's big money in here or not. Like right now, there is nothing going on. So now they're at full, it's algo's gone wild. Now it's just let's whipsaw traders to death, right? So yeah, I mean, not really, not as a tradable method that I've seen. And again, I've done nothing but stare at order flow and these things for 25 years. Not these, I've been looking at these for 8 years though. Your approach is a game changer for me. Thank you so much. Thank you, HA. I love traders that appreciate what I'm showing them. So guys, that's another thing too. Like I've gone through the ringer as a trader, right? I was dead broke, started a trading firm early 2000s, lost every day for my first 2 months, about to get fired. Clicked one day, it was right after 9/11. They shut the markets down. I was trading the DAX. You guys have all heard the story, but some of you haven't. Figured out something. I started seeing patterns. Went from trading 1 lots to 1,000 lots and made $15 million for my trading firm over 3 years. And then overnight, couldn't make $1, right? Like literally. So again, there's a saying, there's nothing worse than having money and losing it than never having money at all, right? Because when you never have it at all, you don't know what you're missing. When you have the money and you think you're set for life and it all disappears, that's pretty traumatic, right? So I've gone through a lot of emotional stuff in my life as far as financial, and my story is a great story for you guys because it shows like you can get blown out and you can come back, right? So that's my story. So I'm not $1 million trader anymore. I'm not backed by a trading firm per se. I mean, we do have the stuff working automated with a trading firm. We're trading 1 lots. It's nothing big. But the point is, it's like what I was getting at is I find great pleasure in showing you guys because I'm such a, I don't want to say jaded trader, but it makes me feel good to show you how to fight back against the man. This is a zero-sum game. These algos, what do you think these things are doing? You think they're just putting in orders, putting them and pulling them just because it's fun to do? No, they're trying to take your money. They're trying to take the retail trader money. That's the point. So it takes me great pride to show you from my experience of what is going on in here to help you compete. Right? Because if you don't understand this stuff, so again, you can be a profitable trader. There's not many of them. You can be a profitable trader without this information, but I don't care. You still don't have all the information. So even if you were an awesome candlestick trader, great. You know how much better you would be if you understand this stuff? You'd be 10 times better probably, right? It's my guess. But the point is, if you're not using this, you just don't have all the information, period. So on that point, it's my theory. I'm pretty sure I'm right, but it's just my guess. So the CME introduced this. You're probably saying to yourself, well, why would the CME show this information? Like, their big money they're the big players, right? These algos and the big money, they're the big. How do you think the CME is in business? From commissions, right? So you would think the CME wants to protect the people that are generating the most commissions for them, right? Well, then why would they give us this information? Why would they let us see icebergs that are supposed to be hidden? It's my guess, my theory. Again, this started in 2017, 2018, that they gave this enhanced data to us. I firmly believe it's because the retail trader was done. Like they were dying. There was no one in here for the big money to take their cash. So it was like shark eats shark. It was algo versus algo. Well, their results probably weren't great going against other algos. The results are very good when they're going against retail traders, right? So Again, it's just my guess that the CME introduced this information to kind of give the retail traders a fighting chance, right? If they know how to disseminate this information, and that's what Bookmap does. That's why Bookmap's so incredible. It's incredible in its own right, you know, as far as the heat map and understanding and all their algos they have. We even got into Market Pulse and stuff like that. But then you take this SI, this CME MBO data, this enhanced data, where we can see this activity, and it's a game changer, right? So like HA just said, it's a game changer, and it is. Like, so again, I'm not saying you can't make money without it, but you just don't have all the information if you're not using it. Great analysis, Scott. Thank you, Ismail. And guys, please like the video. Like, you know, if you feel like I'm giving you some kind of worthwhile information, it helps Bookmap as far as their search engine optimization and everything else. If you like the video, like, that's your payment to me of being, you know, a thank you. So just like the video if you like what you see. And I don't know why you wouldn't like it. Doesn't mean every trade I put on as a winner and you call it winners. It's, I'm giving you this information. You don't know what you don't know, right? You have no idea if this is your first webinar watching this stuff. You have no idea this stuff even exists. After this webinar, you're like, holy crap! Like, I didn't know what I was missing here. So give it a like. All right, I'm a consistent, unprofitable trader. So are most traders. 95% of traders fail. And again, what I'm trying to tell you guys in my 25 years experience, this is the best edge I've ever seen, right? All right, so nothing's going on here. I'm waiting for this market to move out of here to prove as a bullish event, aka hit the ATR, which is that blue line, or I still have these reversion trades working. So there's nothing else going on. I take that back. We had a soybean. So this is the other thing too, guys. There's so many of you that just want to stare at the crappy ES all day. Like, there hasn't been one event in the ES. So usually it's just a chop fest when you're not getting events. Like, look at it in here. Look at these algos in here. Look at this liquidity. So right now it's algos and options dealers hedging. That's what's going on. So I won't put trades on unless I get stop iceberg events. That's my trigger. So I haven't put one trade on in this market. I did have a couple. So I have, for each market, I have a certain amount of volume. This was close, aka thresholds, that are tradable events. I probably could have drawn this. I just saw it now. I mean, this is over a half hour, so I wouldn't combine these. But the point is, unless I see a threshold event, and there's different thresholds for each market. Like, for instance, I need to see 700 icebergs or more to trade the ES. In NASDAQ, it's only 150 or more. If I don't see that threshold hit, then I don't trade. Then you can combine these two. So this one was, let's see. This one was close, right? We could probably draw this since you guys love trading ES. But what I was getting at before I do that, let's look at a market that actually something just fired off in. This is soybeans. So I'm sure there's like guys groaning, well, I don't trade soybeans. Well, why not? If you have this information, it's the same across all of these futures products. It's about traded volume and taking advantage of trapped traders. So like, what's setting up here? Well, the minute I look at it, it's already an A+ reversion setting up, right? Here's your event. Here's your event. Here's your entry in the zone. As long as your stop's outside of it, you take that reversion. So I'm going to take that guy. Again, this is on the trading firm too, but I'll just take it here so you guys can see it. And then this tells you what I can trade. So and it's basing it on the volatility. So right now, this market's only moving 1.5 points every 5 minutes. That's very low ATR, but it doesn't matter. This will adjust. So this just retested right now. And let me put this in. I can put on 5. I can put on 6 actually. That's that. And then here's my stop. So I already know if I get filled on this and lose, I'm risking $500. It gives me my sizing. That's one of the awesome things about the zone drawing tool. It's not a guess. How much should I put on? Am I over trading my account? That's my entry. If I get filled, that's my stop. If I'm wrong, if this trade doesn't work, I stop out, on to the next trade, on to the next edge. So hopefully this fills me. So that's my entry. It'll ring when I get filled. And then we have position trading strategies, right? So then this is the A+ reversion. Is this last event? Is this in an important area? Let's look and see if we have like an Izzy trade here. No Izzy. Market's just sitting right here. So this was not an inflection zone. Nothing to do there. Let's check our lugs. I'm still long NASDAQ, by the way. I haven't got out of those. Should be, yeah, see how we just formed new lugs? So this is like bullish in its own right, like a thesis, right? So when markets form new lugs, Ludwig levels, when it's able to have enough strength to break through the red Ludwig level and form new ones, as long as it, and then that prevents just validated long, we'll go back there in a second. As long as yellow holds, yellow and prior red hold, the expectation is the next red. This is just a guess. It's a thesis. That's what a thesis is. It's a guess of what's going to happen. But if you're getting events and they're bullish, like this event right now is bullish, I could say, well, you know what? The Ludwig levels are bullish. I got filled on this reversion. We'll keep an eye on that. And the way I'm trading this now, if it pops back to the zone, I'm out. There you go. So that's working. Here's my stop. This is very automated, guys. And actually, I need to move this down. Remember, you want to move it, and once you get filled, that's where it stays. But this is a great way to work on your trading. If you can't sit in trades, this is the perfect trade for you, because this is the best thing, closest thing to an algo you're going to get as far as for click trading, right? So it's like, I'm in there. I actually should have moved it down a tick because that didn't move. Remember I told you to move it until you get filled? I'm in there. My stop's here. I'm out there. And I do nothing. I let it work, right? Most traders can't do that. That's why it's a great trade to learn how to sit in trades. Let's look at NASDAQ here. Just validated. All right, I am still long. These are GEX levels up here, so I'm watching this very closely. I still have 6 micros on. I put on more size on this one account, but the point is, if it gets up here, I'm going to get out of a couple more. I got out of a couple down here at this GEX level, remember? So you got GEX 10, you got 2 spot gamma levels. What are those? Those are areas where dealers are going to be hedging, so it's very likely going to snap back. Then I have the back in black trade here, reversion, if it does this. So we'll keep an eye on this and take it if that happens. So I'm going to be getting out of some of my longs at these levels if it can't bust through, right? And I'm going to use this to kind of judge if this is going crazy, then I'll hold on to it. And then I could take the corresponding ATR. Again, different strategies. All right. It feels like I've been on this webinar for 3 hours. It's been barely an hour. Platform works in the Middle East. This platform, yeah, I don't know. I don't know the rules of the CME of trading in the Middle East, but I know there's brokers. I'm actually talking to one right now. What's the name of it? I can't remember. I just talked to him. Yeah, I don't know the CME rules, but yeah, you can get Bookmap in any country. I don't know what you can trade as far as the regulations. Just contact Bookmap. They'll let you know. It works everywhere, even in space. Are you sure about that, AQ? You see any guys trading in space? I'd like to see that, actually. It'd be pretty cool. I don't think I'm from Iraq, and I can't make an account because it doesn't support Iraq community. Again, I don't know that information. Contact Bookmap. They'll know. And they'll probably point you to a broker or someone that does take, if you wanted to trade the U.S. markets. But I have no idea. That's out of my realm. Your book, AQ, so this is what I've been talking about. Your Bookmap looks so cluttered. Do you have a video where you explain your whole setup? Yes. I have multiple videos. These are my courses, right? So again, yes, if you're looking at it the first time, your head is probably spinning. Like, what is all this? What's that? What are these? What's that? What are these lines? What are these lines? What's the red? But guys, it's very, very simple. And I'm dead serious. Once you understand what you're looking at, this is not complicated whatsoever. Right? So again, you don't know what you don't know. Once you understand, so perfect example, Mark Douglas, Trading in the Zone, uses the exact example. When you first learn a candlestick chart, when you look at this, if I brought a little kid in here, what would it look like to them? Nothing. It just looks like squiggles, right? They'd be like, what is it? Once you know what you're looking at, and then it makes sense. It's the same thing. It's the same thing with the Bookmap and the zone drawing tool and the GEX levels. Once you understand it, it's very, very simplistic, right? The simpler you can make your trading, the better you're going to do. There is just nothing complicated about this whatsoever, right? This is the zone that just drew the stop run. This is the ATR, this is the entry, this is the stop down here, this other yellow line. These are GEX levels. If I'm taking the reversion trades, the dotted lines are the reversion entries. 1 ATR, 2 ATR, 3 ATR. The dash dotted are the stops for each one. Again, it's very, very simple once you understand it. So you can learn it. I have a trade room. Guys, this is all in the document that I gave you, right? Actually, I want to know when if this tags this GEX level, because I want to take the back in black here. So you can put little alerts here. Notification, so that will ring when it gets up there, so I don't miss that trade coming back potentially. And I want to get out of some of my longs here if it gets up there. Again, guys, you don't have to wait for exact tags. I mean, this is a little far, but if it's like spinning around right here, I'm going to get out of some more of these longs. So anyway, this is why I put this in, guys. I'll put it in one more time. So this is everything that I use, so you can learn what I'm doing, right? So the main thing is, so my just go to my website and you can see all this on the website. Right, here's the live trade room. If you want to come in, I do this every day. I try to do twice a day, but the afternoons lately have sucked, so we'll skip webinars if there's nothing happening. But here's the different monthly, quarterly, yearly. Right, and then you have my courses. So this is why what I was explaining before. You can learn this stuff watching me trade live, but it's going to take you, your learning curve is going to be very, very steep because I'm trading live. I don't have time to break down everything into basics. If you get these this is the main course. This is about the SI indicator, right? That tells you how to trade these events. And then all this stuff is where I look for these events in important areas. There's 16 different important areas in the trading strategy course, and it's developing education or continuing education. As I add them, you'll get a notification. And then you have the ATR reversion course, right? So the main driver of my trading, the 100% driver of my trading, is the SI indicator and the 6 distinct events that I look for in important areas, right? So if you want to learn it and hit the ground running, you get the courses and come in the room, and then you know what you're watching. You can learn it live. It's going to take you a lot longer, is what I'm saying. I feel these bookmap streams are 5% value and 95 advertisement for a course. Well, then AQ, you go do what you do. I don't know what to tell you. I mean, it's advertising. I'm telling you how, if you want to learn how I'm trading, it's the best way to do it. I just got done saying, if you want to just try to learn by watching me trade live, you can do it. It's going to take you longer. And you don't have to watch these bookmap streams. Go find somebody else that claims to know what they're doing. Again, guys, the reason you're listening to me, I hope, is because I have documented trading 25 years of making millions of dollars at one time, right? The point is, you're getting that information. I'm giving you knowledge. That's the whole idea. So if you don't find my knowledge useful, then go somewhere else. I don't know what to tell you. If you don't find value in this, then you don't find value, but then you're just not seeing what you need to be seeing, is my opinion. But thanks for the input there, AQ. All right, so I'm waiting for this. This is getting close here. I might, if it struggles here, I'm probably going to get out of a couple more of these Izzy longs. Remember, I put this trade on way down here for this broken ice event, right? And there's other trades. I just waiting. This did validate long here, right? This guy validated long right now. Touch the ATR. If it goes ATR retest confirm, I can put on bark. Blind ATR retest confirm. What does blind mean? Meaning this can happen in any area. It doesn't have to be a specific area for me as long as it follows the pattern. And then lick, bark, and lick. Lick means lick is a bark trade where I'm just looking for longer term heavy resting liquidity as my target. So you see it right there, right? This is a magnet. It's not, oh, look at all these sellers up here, I want to go short. It's the opposite. These guys want to get filled, and the longer it's been in here, the more likely they are to get filled. This is the big money. They find a way to get their orders up here. How do I know that? Because this is the game I used to play. I used to load up the order book, and then I would push the market right into my orders, and I'd be out of the trade. All day long, that's all I did. That's how I made millions of dollars at the time. So anyway, if I did put on the lick, that would be my ultimate target. So my entry would be there, but I'm waiting for this pattern, and then I'd be looking in there. That's 80 plus points as a target. Justin says, I can tell you, AQ is a member of Scott's Room. This is a great way of getting value to become a successful trader. Right, and you're getting this for free, AQ, so you think you'd be grateful instead of bitching about advertisement. I mean, that's ridiculous. You still have to learn and apply yourself. I still lose plenty on trades, so it's not a magic bullet. It's an edge, right? Nothing's a magic bullet in trading, guys. It's an edge. It's an edge that's the best edge I've seen, if you want to take my word for it. All right, is this news? There's something just came out. It's fine, I'm long, but it's like, all right, this could be a sexy gex here too. I just don't want to take it into a news story. I'm going to get out of a couple of these longs here too. All right, see how it's kind of struggling here. So, if this was just a norm, I heard him saying something, so I'm not going to put this on. But this is a sexy gexy otherwise, right? You just had, this is actually a double whammy. I might put this on anyway. Look at this huge sell ice coming in here and a stop running in these gex levels. You have gex, you have spot gamma gex levels, mentor Q gex levels. I'm going to throw this puppy on. Again, I'm rolling the dice. If this is news, this thing could just keep ripping higher, and then I'm screwed, which happens nonstop lately with these news headlines. Here's the stop. All right, so what else do we got? Now we have a new event. Remember, I was working this A+ reversion down here. Well, that's done because the idea of the A+, the rules for the A+ reversion is the most recent event moves into the last event. Well, this is done now, so I'm going to cancel that. Again, this could blow. It doesn't matter if it blows out of the water or not. It's a trade. It's the edge. You put it on. I don't know what's going to happen next, right? And I'm still long some Izzies. So if this blows through here, it blows through here. Otherwise, what I'm going to do here, the sexy Gexy trade again is looking for these opposing volume events into Gex levels. So this is what the news story is right here, and this is why Nasdaq ripped the most. U.S. weighs easing Nvidia chip curbs on UAE's Trump plans visit. So this is why. Hey, look what's firing off here, Nvidia. What do you know, right? So I put this on into the news story. I'm fine with it. You know, there's enough going on. You know, there's enough here for me to take a shot on this trade. It's not the best odds, right? Everything's probabilities anyway because there's news out. But whatever, I'm gonna give this a shot because. One, you had a stop run into these levels, and somebody's selling this too, so I'm going to give it a shot. Right? It's an edge. I will get out of if this does move lower. I'll get out of half there, looking for the daily reaction, and then I'll put on a potential A plus reversion here too. So this one could be put on as long as the stop is through the prior event. That's the stop for the one. So I put on A plus reversion there too. So I'll get out of. See, the problem is on this account, I'm only trading one account here, I'd have to get out of the entire Gexy and then put on the reversion, but I'll do that just to show you guys here. So this is telling me on the reversion trade to risk $500, I could put on 0.6 or 6 micros. So I'll put on those and I'll get out of the Gexy if it comes down there. I have too many on here, by the way. I was only supposed to put on 4. Remember, so this position, this sizing here is based on me entering a position short down here. So obviously I can put on more than that. 6 is kind of aggressive, but whatever. Trade's on. That's the stop. Actually, I took it out on exit. This is the stop there. Jim Thomas, I will echo Justin, have been able to qualify multiple Val accounts. The room pays for itself, even if it just keeps you out of bad trades. Yeah, guys, and the other thing too, like the courses, there's some courses out there that I see from guys that have never made $1 that they're selling for $5,000, $10,000. I mean, again, the information you get, especially in trading terms, relative terms, these courses are a pittance. You can make this on a trade, right? Like this one is the 7 hours of course, but like the other one, $700. It's like this is nothing in trading terms, especially for the information you're getting. So again, you find some other educators, you see the ridiculous prices, and let me know. But again, I'm not, guys, it is what it is. If you don't find value in it, then you're welcome. See ya. I don't know what to tell you. I'm showing you the best edge I've seen in my 25 years. Whether you want to take that advice, great. I can't make you do anything. All right, so they're still buying this NVIDIA. Again, I put this into this news story. But I don't know what's going to happen. What if someone came in here and said, I think this is nonsense and is selling it. So we'll see what happens. I'm still long some too from that flexion zone. So I have the Gexy on. What else? What else do we do? Let's see if we have any event or any areas. This is another Izzy, right? So this moved through this inflection zone. Now it's into this one. This is where stuff happened in the past. The further they go back, the more, that stuff that happened before. You had directional conviction. So these zones are drawn on the 4 important areas of trading. Tops and bottoms balance areas, high volume nodes of balance areas, directional conviction. Gaps are directional conviction, right? And buying and selling tails. That's how these are drawn. So over here, we had directional conviction. Directional conviction in Nasdaq is usually a 100-point move or bigger, like in one bar, right? You had selling tail, selling tail, selling tail. And then it led to this whole move down eventually, right? So this is a great zone, to great edge probability of this fading if this event turns bearish. I'm not in that trade yet, right? The only trade I put on here is the sexy Gexy, is when I jump in right in the middle of the zone. The rest of these trades, this Izzy, I would enter. I'm supposed to enter right there. In this case, I would get it through that event. I don't like to enter into prior events for the same reason we take the A plus reversion. But just say that's not there. If I'm taking this Izzy, this is my entry. I'm not getting in until it can show me its hand and move the ATR plus out. Those are my rules from watching 4.2 million of these things. AQ, have you been on the webinar? Can you summarize your approach edge? I've been summarizing the approach edge for an hour and a half. Like this, This is summarizing the approach edge. We're looking for these stop iceberg events based on the CME MBO enhanced data. Google CME MBO data. I'm not going to get into it right now. You can read about it. It's this enhanced data where you can see what the big money is doing and what the retail trader is doing. Usually the retail traders are stop runs that fade. This one held. It's called a stop and hold. I have different edges, events, names. This is sell ice. Somebody in here is selling hit with hidden orders until they get traded into. They just sold 200 NASDAQ contracts, right? That's important information to know, right? And then we take advantage of how the markets not only move out of these areas, but come back to these areas. So again, this one down here, when I took a position trade, how did this one work out? This was an Izzy on a broken ice event down here where big money came in selling, didn't work out for them. We went long right there. I went long right there. How's that trade? That's what a position trade is. Then we have trades that come back to the event that happened nonstop. Depends on what your personality is. You pick the strategies you want to trade. But I've been summarizing for an hour and a half. So why do people learn? So what do people learn in the course with your methodology? They learn what I'm showing you right here, right? What I'm trading and what I'm doing and what I've been explaining for an hour and a half here is what you learn by watching me trade live and or the course. The course is going in it in detail and slows it down so you can stop it, watch it again. When I'm trading live, again, I'm trading multiple strategies, multiple markets most days. There's only nothing really going on today except for NASDAQ, right? That's what you, with the courses, you learn this stuff and then you know what you're watching. That's it. It's very simple. All right, so this is still live here. But you see, guys, so I lost on the one Gexy. On here. All right, I lost on this one. It was this one here. Lost on it. Did I say, oh my God, I lost on this one. I can't take another one. I just can't take another loss. I put it on again. You keep putting it on. If I hit my loss limit for the day, then you just shut it down. But until then, I keep putting the trade on. I don't know which ones are going to work. Neither do you. Neither does anybody. That's why it's called an edge. When you sit down with blackjack and play blackjack, playing or dealing, do you know what the next hand's going to be? No. You just play according to the rules. And if you have an edge, if you know how to count cards, you have an edge. Or if you're the dealer, you know the odds are in your favor. You keep dealing the cards. You keep dealing the cards. You keep taking the trades. It's called probabilities. Read trading in the zone. All right, I'm still in this A+ reversion. It's not so A+ yet. Stops down here. Soybeans is just, it's like watching paint dry lately, but that doesn't matter. That's the trade. The trade's on. And I got the Gexy short on here. I will get out of the Gexy short and I'll turn around and take an A+ reversion long here, all on this one account if this happens. So keep an eye on it here. And thank you guys for addressing AQ. I appreciate it. I don't think he's ill-willed. He's probably been jaded like most traders, right? All these educators out there and guys trying to sell stuff, right? Guys, I sell stuff because it's I'm giving you valuable information. Like it still takes me, you're getting my experience over 25 years, and it takes me, time to do all this stuff, right? Just like the trade room. It's like I'm in here giving you my time and telling you what I know, right? So yeah, it's just like anything else. When you go to a store, do you expect people to give you free stuff? I mean, nowadays some people do, but no. Right? You're paying for that good or that knowledge. It's nothing new. But I can see why some traders are jaded. There's just a bunch of bullshit out there, pardon my language. Again, most traders don't have any kind of documented past, any history of making money, right? You can come in my room. There's plenty of profitable traders in my trade room, right? So it's like there's been guys. So if you go to my website, again, we didn't really get a chance to get into this. Got 5 minutes, but so if you go to my website, I just put this up recently. Here's some testimonials. Click on a picture. A number of these traders have been in my room for 2+ years. So they probably wouldn't be in the room if they weren't making money or doing well or understanding things. See what I'm saying? So click on a name. Like the CN's been in there for, I think, close to 3 years, right? So click on it, play it. You can hear what CN has to say, right? There you go. I'm not going to listen to all that, but the point is there's the testimonials. I forgot what I was going with that too. So quickly, guys, this is what I use in my trading. There's another thing too. It's, oh my God, you watch so much. I don't have all the money to pay for all this stuff. You don't have to. All you really need to do to learn what I'm doing and do what I'm doing is, hold There's more news out. I'm just so sick of getting swiped out of trades. It's just ridiculous. Can I get it? How about a news story that's negative for once so I can get filled here? Oh, you don't have to use everything that I'm using in my trading, right? You can, all you need is Bookmap. That's this. These are discounts. Click on this. You get a discount to the basic software. Then you need the MBO bundle from the Bookmap marketplace, right? That's this. You have to have this stuff if you want to follow the way I trade, right? The MBO bundle. Click on that. If it clicks, no such product or some error occurred. That's not good for them. I don't know if they know that. Okay, there you go, right? 134 bucks a month. Oh my God, I can't afford. Guys, if you can't afford like the basics, like you have to have this if you want to do what I'm doing. You shouldn't be trading anyway, right? If you don't have the money for this stuff, then don't go work for the man right now until you make enough money and then come back. Like, I don't know what to tell you. Some stuff, look, I get as much as I can get for free. I get for free. I try to cut costs too. Like, that's why I use crappy Thinkorswim for charting, because it's free basically. You got to put money in and you can pull it out and you have access to the charting. So anyway, you need the MBO bundle. You need Bookmap, right? And then you need a data feed. So there's 2 different data feeds now that I know of. There might be another one. I doubt it. I don't think so. You can either use Rhythmic, click on market data. You can use Rhythmic data feed. And if you want to watch out, which I highly recommend, you can pick. Can we just have one time where there's not a effing news story when I'm going to trade? Just one time. If you just want to trade ES and NASDAQ, which I'm telling you guys, you're doing yourself a disservice if you're just watching 1 or 2 markets. You just pick on CME. Non-pro, most of you guys are non-pros. I don't know. That's not for me to say. You might be a pro. It's $40 a month for all the products under the CME. I mean, these are all under the CME umbrella, but that's just for certain products. It explains what it is. If you want to trade gold and silver, it's COMEX. Now it's $80 a month. You want to add in crude. Now it's $120. If you want to trade CBO, like bonds and wheat and soybeans, that would cost you $160. Or you can do the bundle, and it gives you all of these for $101, right? And then Bookmap's even cheaper. Go to bookmap.com and go here, and you can get their data feed. So this data feed is what is the enhanced data that gives you the CME MBO data. Go over here to more, click on Bookmap Market Data. There you go, 50% off the first month, so you already get a discount to that. And then it's $79 versus $101 with Rhythmic. So this gives you the MBO data too. So you have to have that stuff to get started if you want to trade what I'm doing. The rest of the stuff is all discounts to it. So Apex, this is why I highly recommend this. Is the one I use. Again, this is practice accounts, and if you want to learn, without risking your own money, which I highly recommend, right? You do one of these, use Pulcini 50 as the code, and it gives you whatever discount is. That's another, that's affiliate for me. That's another thank you can give me for what I'm teaching you. Like, if you use my code, then that is affiliate payment to me. That's good. It's not much, but it's something, right? So that's use Pulcini 50 for any available discounts. Then you have Mentor Q. These are all the discounts for Mentor Q. These are these gamma levels that I'm showing you that I just took this sexy Gexy off of. Then you have Spot Gamma. These are these these levels. And then we use Spot Gamma for the hero. This is real-time options flow that helps you gauge. We didn't really get into this today, but you see big moves in this. The dealers are going to be hedging. So this is actually a great example of the flow. We have a Flowbee trade where you get an event. There was an event here, but the hero is moving down. As soon as the flow alert comes in and this thing levels out, the market usually goes the other way. The market's the white line. You can see this move, what happened after the flow alert. So that's Spot Gamma, right? And then you have all this other tick strike. You see that, that's what this is. I don't know why more of you guys don't use the tick strike. Like, it gets annoying when you're listening to a position rip against you, but this is a must have, right? You want to know this stuff. Hold on. Am I actually going to get filled on a trade here? Oh, and by the way, I still am long that Izzy from the beginning of the webinar. I will stop out of that long. I'll just stop out of it here. I normally would put it below the event, so I don't stop out right in the middle of the event. The whole reason we take the A+ reversions. But you got an event here, an event there, so I'll just stop out of this long here, where I'm going to enter the Izzy short too. So I'm going to take an Izzy short and out of the Izzy long. We just went over this a little bit ago. That price is 20,052. I only have two left anyway. 20,052. All right, that's working. And we're trying to get filled here on the A+, get out of the sexy Gexy and into A+. Of course, it comes within 2 points and then runs away, because that's just my life, feels like. But that's, by the way, you want this in here until you get filled. Like, see this dotted line? That's the entry for the A+ reversion, and it's where I'm going to get out of this Gexy. What is going on here? Let's try this again. Come on. Oh, you got to be kidding me. This guy's, I'm telling you there's a camera in my office. I'm telling you there's a camera in the office. Like, oh yeah, you're going to put your order there? How about we get within one tick and then we run it away from you? Come on, you can do it. Alright, so I stopped out of that ZS A+. Could you just fill me on the damn thing? Goodness, alright, I'm just going to get in here. Oh wait, that's too many. So I just got filled on everything here. Jesus. Alright, hold on. Sorry, guys. So that's what I get for not following my rules there, right? So right when I touched it, that's when it ripped into my entry. So anyway, I got out of the Gexy short. I don't usually get out of the full trade, but I'm showing you the A+ reversion here. Now I'm long the A+ reversion. My exit for the A+ reversion is here. And I should have stopped out of, why didn't I stop out of, oh, I didn't stop out of the, this is my exit for the Izzy, and I'm going to go get short an Izzy trade too. So guys, perfect example, right? Like, I had no idea what was going to happen there. Nor do you, nor does anybody. I got my events. I was worried about the NVIDIA news. This was a Gexy. I put it on. All right, so now I'm out of my Izzy short from earlier. I'm into an Izzy, I'm sorry, Izzy long from earlier. I'm into an Izzy short, and I do have the A+ reversion on now. Right, and my stop for that is right here. That's what this dashed dotted line is. So you see, I'm jumping from strategy to strategy. If you're just coming on right now, you're like, what is this guy doing, right? If you've been on here the whole day, then you know exactly what I'm doing. All right, so that's on. If it comes back to the zone, I'll be out of that trade. I do have an Izzy short on now as well. Position trades, right? I'm just jumping from strategy to strategy like I keep talking about. So you can imagine how hard this is to figure out if you're new in here, right? That's the whole point of the courses, what I'm telling you. All right, what am I showing here? So anyway, I'm Izzy short now. And let's see, that might have been something else too that I'm missing. Let's check. No pick, no profiles encouraged, market profile, composite high or low, no lug. So all I got short is an Izzy, and I got the A+ reversion working here. And then quickly, again guys, I do this every day. This is exactly what I do every day. I'm on every morning. Some afternoons we skip because there's nothing going on. I don't get on just to watch paint dry, but if I'm taking trades during the day, I'll get on and go over the trades I take too. That is, why can't I find this? Oh, here it is. But this is basically everything I use in my trading. You don't have to have all of this stuff, right? And here's more reviews, and you saw the testimonials. And then here's the zone drawing tool. If you want, so you don't have to draw manually. And you've been watching me use this all day. This thing's a godsend. I highly recommend it versus drawing them yourself. But you can draw them yourself if you're trying to save money. Here's the courses. Here's another course. I need to put this up here. I'll have this in a better format next week. I just haven't had a chance. So that's it, guys. This A+ is working. My stop's here, and I am short Izzy. And I got out of my long from the beginning of the webinar. Quick question here. Bookmap is a special in BMO dinner 50%. Yes, but aren't mostly icebergs synthetic anyway? No, you can look at the synthetic icebergs with this indicator, strength level. Hopefully, I don't crash my computer with it. I don't even want it to come up, but you can. It'll import, but they're smaller. It costs more for firms to use synthetic. That's why most of them use the when they go through the exchange, then. So Aki, why are you acting like you don't know what I'm talking about, and then you know about synthetic icebergs? That doesn't make a lot of sense to me. So you're either a savant or you know more than you're letting on. I don't know how you would know that if you don't know what I'm showing you with these other icebergs. So you can't spot them. You can spot them with the synthetic icebergs, but they're almost never as big as the exchange icebergs. Randomize and order ID is different. Okay. Again, AQ. So why are you so how do you know about order IDs and then you're acting like you don't know what I'm showing you here? That doesn't jive. So good luck. HA does the prop firm data MBO? Yes. So rhythmic data. If you get a rhythmic account for a practice account, right, to try to get live or whatever, you get their data and you can use the data for the MBO data. Absolutely. So that's another way to save some money versus paying for rhythmic on its own. Again, there's a ton of traders in my trade room using the rhythmic, the Apex rhythmic data to power Bookmap or to power these Well, yeah, Bookmap, because you want it on. You want to see the data on the heat map. All right, guys, that's it. We put on a couple winning trades. The Gexi works, so this is a great example. I got blown out on this Gexi, right, and I put it right back on, and that one worked, right? So that's why it's called probability. You should keep putting it on if you have the edge. All right, I will. I do this every day in my trade room. Come on over to learn what you're looking at and what you're doing. Otherwise, I'll see you guys next Thursday. Thank you.